All right, so if you missed yesterday's episode, I definitely encourage you to watch that. I basically talked about a relationship that I added to my gold price forecasting model that I actually today added to my silver price forecasting model. And it's going to be important because if we're taking a look at some of the prices that we're seeing, the price action that we're seeing, some of it kind of makes sense, some of it kind of doesn't. What I noticed that didn't make sense with gold was that it was moving, but kind of lagging, especially compared with Bitcoin. And I looked at the same relationship between silver and Bitcoin. And funny enough, when you look at that relationship between silver and Bitcoin, you find something pretty interesting. Now, the thing about this, you're actually looking at the under the hood, you could say what the engine is of my silver price forecasting model that I pretty much see and I have control over. This is pretty much what the relationship looks like between the silver price forecast and the actual silver price month to month. So it's pretty tight, as you can see there, about a 0.93 correlation, 0.86 in R squared, and same thing with adjusted R squared. Yeah, but take a look here as far as the relationship between Bitcoin and silver is concerned. I basically ran a correlation to show you guys in this video what this relationship is. And if I can actually just get this thing to work, there we go. It's about 0.76, or you can just round up to 0.8. Now, for those of you who think I just wrote this in, this is actually a formula on Google Sheets that I did. There you can see the columns that I ran the correlation on. So this is the formula, and that's what I got between silver and Bitcoin. Now, if you really don't believe me, that was B and that was the H column. Scrolling over here, here's the H column, Bitcoin prices going back to 2014. Here's the B column, silver prices going back to 2014. So you can see that there, 2014. This is for my very, very skeptical people out there in the audience, because I know many of you may be wondering, well, is this forecast really, what he says it is, or is it just, blowing smoke? So here exactly is what I'm seeing with the addition of dollar futures and Bitcoin to my forecast model. Now, remember, as you saw on the graph, it wasn't a lockstep tight line graph. And the reason why is because it's a forecasting model. If it was the exact same price, that would be a crystal ball. And unfortunately, I don't have that. If I did, I'd be a very rich man. But this is what I've gotten from silver with the addition of Bitcoin. So as Bitcoin has been moving up, and as you saw, there's a positive and strong correlation with silver movement since 2014. So currently right now, Bitcoin is around 62,577. But let me show you what happens when I go to 66,000. And this is just impacting this one data point alone. Data doesn't just move in silos. I also have gold prices in here as an input. So just take that in consideration. It goes up to about $26. Let's throw in $100,000 Bitcoin, because a lot of people talk about that. $30. So again, there's a positive relationship here between Bitcoin and silver, which is the opposite of what we saw with gold, where there was a almost this negative correlation that we saw with gold. So basically what I'm seeing is, pretty much where we're kind of hanging around at right now with the silver price. Silver right now is around $24.14, and mine was around like $25.50. So not too far off. And basically a nice kind of read on where we are regarding silver. Now, here is the technical look at things. So basically things are looking pretty positive for silver, technical analysis wise. So here we have the RSI. It's been kind of moving up, getting close to overbought territory. The MACD is looking very strong. Again, up now close into, or now in about positive territory, with the higher or closer, I should say, moving average. And we have the trend line that was newly established after we hit that bottom in late September. And we are pretty much above, making nice runs above where the trend line is. And we are kind of in this new, or I shouldn't say new territory, but we're kind of gotten above this level here in the Fibonacci retracement level, which is around $23 and let's just say 50 cents. So the next level is close to about $25. So we're kind of in this new middle territory that we're trying to reestablish here. So what I'm trying to say is that I pretty much see us being in this mid 20s area for some time in the near term. Now, what I am really hoping to see take effect in the long term is this. Now, this is the 10-2 yield curve. And as we saw a few weeks ago, and I made some videos on this, it was rising up pretty nicely. But it actually took a little bit of a breather recently, and it's kind of just been, in this trading range, as you could say. So it hasn't really like spiked up back to where it was back in late March. So it's still kind of taking its, merry old time. And I think once we really start to see this thing go right back up, then I believe we'll start to see things really change for gold and silver prices. Now, I want to end this video again with talking about my model, because yesterday, this is the video from yesterday, regarding the gold price pressure and everything. That was actually a CFA thing that you just saw there. This one person named Kat Sang said, "I'm skeptical about how useful your correlation model is, since we don't know the factors that I guess I've included." I'm trying to make sense of the comment, but factors that I've included, and do they have a linear relationship with the gold price? And again, guys, I'd only add inputs that have a significant relationship with gold and silver. That's the reason why they're able to get so close to the actual price. If they didn't have a nice relationship with gold or silver, then my prices would be all over the place. I would be putting in, for example, higher CPI, and I might be getting like gold at $20. There's a reason why it's so close to the actual price, and that's because the relationships are pretty strong. Now, I even said that basically in no uncertain terms here in my comment replying to this guy, saying this is a multiple regression that includes 6 inputs. In an aggregate, there is a 0.98 correlation with the gold price, and that is true. If you watch the video from yesterday, I showed that my correlation within my model went up to 0.98 with the addition of Bitcoin. And also starting at 2014 with that new regime of cryptocurrency being added into financial markets, and with it having publicly available information as far as price action, volume, so on and so forth. And then I said, the great thing about statistics is that you can run the same experiment and see if you can get the same thing. So again, I'm using publicly available information. This is something that anybody can do. The thing is, I'm doing it because I'm interested in it, but also I know how to do it pretty easily. So if you wanted to do it, you could, but if you don't know how to do it, it might take you some time to learn how to do it and then get all the spreadsheets, then try to figure out how to do the multiple regression, so on and so forth. But again, I try to be very open and transparent and show you guys that, hey, this is actually a real spreadsheet and I'm not just blowing smoke up your butt. But again, you can believe me or not. But here, basically, I'm getting pretty close to where we are with the actual silver price. So let me know what you guys think. What is your call for silver in the comments section below.